Hey everyone, welcome back. Today, we're diving into the USD liquidity monitor. The market is sending us mixed signals. On one hand, Ethereum is flashing a strong short squeeze signal. On the other, macro support is looking weak. Can ETH lead a rebound, or will the weak macro drag everything down? Let's find out. So, what's the core contradiction I'm seeing today? It's a battle between Ethereum and the macro economy. ETH's funding rate has been negative for 4 days, which is a classic sign that a short squeeze is building up. But at the same time, the US dollar index is still strong at 100, and rate cut expectations have plummeted to just 1.9%. So, can ETH's momentum win out? Let's look at the macro data first. The probability of a rate cut in June, according to CME, has dropped to just 1.9%. That's a big drop from just a week ago. The DXY is holding steady at 100, and the VIX is coming down, which suggests some easing of fear, but the overall macro picture isn't giving us much support. Now for the liquidity and crypto data. On RRP is draining fast, which is good, but bank reserves are still below the critical $3T level. Both BTC and ETH are down significantly from a week ago. But the key number here is the ETH funding rate, negative for 4 days. And the fear and greed index is at 15, which is extreme fear territory. Let's break down the liquidity conditions. First, the on RRP. It's dropped by over $500 billion in a week. That's a huge amount of liquidity being injected back into the system. Think of it like water being released from a dam. This is generally good news for stocks and crypto. But we're not out of the woods yet. Now for the bad news. Bank reserves are still below $3 trillion. I've talked about this level before. It's a critical threshold. Below this level, the system starts to feel a liquidity crunch. So even though on RRP is releasing liquidity, the reserves are still dangerously low. This is the main reason I'm cautious. Adding to the pressure is the TGA account. The government is continuing to issue more debt, which soaks up liquidity from the market. So, to sum up the liquidity situation, we have one positive on RRP and two big negatives, bank reserves and TGA. It's a mixed bag, to say the least. Now let's get to the key signals. The strongest one by far is the ETH funding rate. It's been negative for 4 days. What does that mean? It means a lot of traders are betting on ETH to go down, essentially shorting it. When this happens for several days, it sets up a classic short squeeze scenario. History shows this setup has a high probability of a sharp price increase. The second signal is the falling rate cut expectations. It's now down to just 1.9%. This is a big shift from a few weeks ago. It tells me that the market is adjusting to a higher for longer interest rate environment. This is bad news for all risk assets, including crypto. It means any bounce we get might not have strong legs. The third signal is market sentiment. The fear and greed index is at 15, which is deep in extreme fear territory. Now, this is interesting. While it feels scary, historically, these levels have been great buying opportunities for the long term. It doesn't mean we won't go lower, but it tells me we're getting close to a bottom. So, putting it all together, what happens next? I see 3 possible scenarios. The most likely one, in my view, is an ETH-led short squeeze. The second is the weak macro pushing everything lower. And the least likely is a broad market recovery. Let's break them down. Scenario A is the ETH short squeeze. For this to happen, ETH needs to break above the key resistance at $1,750. If that happens, we could see a sharp move up, with ETH leading the charge and Bitcoin following. This would be a trade driven purely by crypto market dynamics, not the macro. Scenario B is the bear case. If the DXY starts rising again and rate cut expectations disappear entirely, the macro environment will become too strong for crypto to overcome. In this case, we could see ETH test $1,500 and Bitcoin go back down to retest $60,000. Scenario C is the full bull case. This would require the DXY to break down below 100 and for rate cut expectations to make a comeback. This would be great news for everything, stocks and crypto included. But given the current data, I see this as the least likely scenario for now. I want to highlight one anomaly signal, the divergence between ETH and BTC funding rates. ETH is screaming short squeeze, while BTC's signal has already closed. This is a very interesting divergence. It tells me that the market is not expecting a broad crypto rally led by Bitcoin. Instead, it's positioning for an Ethereum-specific move. So, let's wrap it up with a one-sentence summary. We're in a tug-of-war between a strong ETH short squeeze signal and a weakening macro backdrop. The most likely path is an ETH-led bounce, but it needs to break $1,750 first. I'll be watching that level closely, along with the DXY and rate cut expectations. For the coming week, these are the key levels I'm watching. First and foremost, ETH at $1,750. A break above here is the green light. Second, the ETH funding rate, does it stay negative? Third, the DXY at 100, will it hold? And finally, bank reserves, are they starting to recover? Alright, that's my analysis for today. Now I want to hear from you. Which scenario do you think is most likely? An ETH short squeeze, or a macro-driven meltdown? Let me know in the comments below. Thanks for watching. If you found this deep dive into liquidity helpful, please hit the like button and subscribe for more content like this. I'll be back with another update soon.